All right, welcome in everybody. We're going to do a quick educational video talking about this stock market dip and how we can survive and thrive in a market environment like we currently have. So I've got the heat map up quickly. Just quick glance, you can see there's a lot of red and there's a lot of blue chips that are down over 10%. This is a year-to-date chart. So we are seeing a dip. It's currently a dip. In some cases, a correction. Some stocks are entering a bear market, like Tesla, 43% from its highs. That's a bear market. So we're going to go over some things that we can do, some action items, and see if this can help you guys. So in a market dip survival guide, the markets are dipping and nobody truly knows if it's the bottom. We never know when the bottom's going to be. And in times like this, you want to definitely avoid making predictions. I think this is the bottom. I think we're going to go lower. I think it's going to go back up. Avoid making predictions. Let the market tell you what it's going to do. All you can do is have a plan and stick to it. We don't know what's going to happen. Have a plan. What companies do you want to buy? Why does that fit your portfolio? Why does that fit your strategy? And just stick to your plan. The market's going to do what the market is going to do. So we also want to space out our buys and keep 5 to 30% cash in your account. So we're going to talk about those in a moment. But when it comes to the reality of a market dip, they are stressful. So dips are stressful. Headlines are coming at you real fast, more than ever now these days. And you're seeing your portfolio drop in value. Especially now we're seeing it's just pretty relentless. We're not even seeing any bounces in this market. It's just down 1%, 2%, down 3%, down 4%. We've had some pretty wild days. And, you know, more than ever, this recent sell-off is everyone's involved because it's a lot of politics is intertwined in this. And that's what makes this dip a little bit more polarizing, is that everyone, depending on your side, is hearing the news and they're correlating it to the market, the economy, and this and that. So I'm not a political person. I focus on the markets. I focus on companies. And to me, politics is a big sideshow and makes a small difference in the train of things. The headlines like to focus on this bill, this tariff, this whatever. But in the scheme of the whole grand thing, it's the companies that do the dirty work here. So I don't focus so much on politics. It's a big circus to me, but I do see all the headlines coming around, and I see how it does suck people in, especially more than ever. Every aspect of life is being sucked in, even to your eggs. You can't talk about eggs without it being a political thing now. So anyways, side rant over there. But when we're seeing all these headlines and you're seeing your portfolio drop in value, it's just important to don't do anything rash. Avoid panic selling or going all in. So when you see these headlines, don't make big decisions. Don't make a panic sell and don't go all in because of a tweet or something that just came out. Stick to your plan. And timing the market is just guesswork, even for the pros. They don't even know what's going to happen. So don't make the mistake thinking I'm going to sell now and buy back at the bottom, or I'm going to go all in now and sell at the top. Timing the market is impossible. You can make small trades here and there with a small portion of your portfolio if you're willing to make the risk there. But again, it's a lot of it is it's guesswork. Now you can structure things for risk reward and all that jazz, but just focus on long-term, focus on your plan. So strategy wins over speculation. Recap of what I just said. Okay, so when it comes to spacing out your buys, you want to spread your purchases over time. This is known as dollar cost averaging. But when it comes to dollar cost averaging, I find it very important to space them out. You don't want to buy NVIDIA at 106 and 105 and 109 and 104. You want to buy a chunk of NVIDIA at let's say 110 is a buy point, and then wait. Maybe your next buy point is 95, and wait. have your buy points spaced out a little bit. Otherwise, if you're buying at the same level over and over again, your cost basis doesn't really get adjusted. So being patient, map out your targets. Where do I want to buy NVIDIA? You're going to use technical and fundamental levels as your guideposts. And then from there, map out maybe 3 to 4 targets and say, okay, I'm going to buy a little bit here, I'm going to buy a little bit there, and my last buy will be here. Map those out. Maybe they don't get hit. Maybe only one of them gets hit. But at least you had a plan and you're sticking to it. So, for example, if you wanted to put in $1,000 to NVIDIA, maybe you invest $250 at a time and you map out 4 buy points that are spaced out. So that's what I mean when I say dollar cost averaging, but you need to space out your buys and strategically space them out. Why do you want to buy NVIDIA at 95? Is it because its valuation looks good there? Or is it because it's a good technical level? What is your reasoning for picking that buy point? So don't just willy-nilly, I'm going to buy NVIDIA at 150. Oh crap, it just went down. So have a plan technically and fundamentally on why you want to buy at those targets. Okay, so when it comes to cash, I like to have 5 to 30% cash in these portfolios. So I try to never ever let the portfolio get under 5% cash. I always want to have a little bit in there for the freak scenario if something happens. And let's say I bought NVIDIA, already my 4 targets, and it drops a huge dump lower on some headline, and I say, you know what, I want to buy a little bit more. At least I have the bullets, I have the ammo to do that additional purchase. Or if the market really just keeps crashing further than I anticipated, or the dip turns into a bear market, I'm able to have something there. So I never let my account get under 5%. I always keep 5% in there. 30% is the higher end. I don't like to have more than 30% cash. I need to be invested. So more than 30%, that's me just not participating, and I don't want to do that. So this allows me to buy bargains during the dips and avoid forced selling in emergencies. If I have no cash, and let's say I have 4 stocks in a portfolio, I really like 2 of them. The other 2 I like a lot, but my favorite stock is in a dumpster fire, and the other 2 are doing, not so hot either. I don't want to sell something while it's being beaten down to go buy the other one. I'd rather just deploy fresh capital if possible. And if I always have 5% cash in there, I'm at least able to do that. So for example, if you have a $10,000 portfolio, you have at least $500 in cash, max of $3,000 in cash. And when it comes to your cash, I also have a plan to replenish the cash as I invest. So as I'm dwindling down my cash pile, I'm looking around and saying, okay, where in my personal finance life, where can I look to get this cash balance to build back up? Because I don't know when the bottom is. Maybe we keep going for another year. I don't know, but I want to be able to keep buying if the market keeps giving me some opportunities. I want to keep strategically buying, and I can't do that if I use all my cash up. So, this is personal finance stuff, but, you can take an extra shift. You can, I've had a few clients that have been selling some of their gold jewelry that's been sitting in a drawer for 10 years, and they're looking to reinvest that into the stock market. Look around in your shed, look around in your garage. Everyone's got stuff lying around. You can take a weekend and throw some stuff on Facebook Marketplace and just slowly sell off some of your stuff that you're not using. Whatever that is for you, that's a personal finance topic, but we all have ways that we can either spend a little bit less or save a little bit more, earn a little bit more. There's always a way, if we prioritize it, to get a little cash in our investment accounts, but you have to plan it out. It doesn't just, oops, I just magically came to $10,000 and it just added, I can add that to my Roth IRA or my brokerage account. It doesn't accidentally happen. You have to plan it out and you have to do it. So this is probably the most important here, is your mindset during a correction. Dips are normal, recoveries will follow. Sometimes they're slow, sometimes they're fast. We don't know. So just understand that this is a part of the cycle. It's never pretty, it's never fun, but this is part of the game. And when we're in times like this, you want to avoid the fear-driven decisions. So like I stated earlier with the political and the news headlines, a lot of that is going to be drumming up a lot of emotions. So more than ever now, we need to avoid fear-based decisions and think logically, think with our plan, and act on our plan. So don't go all in, a fear of missing out, and don't get all out, a fear of your portfolio. Oh, I just dropped 10%. I don't want it to drop another 10%. I'm all out. So have a plan, get your plan together and stick to it. And just understand that uncertainty can be the opportunity. So when the market is having these disconnects where things are going all over the place, the headlines are all over the place, the market's having to react to all this stuff, there's going to be opportunities from the uncertainty. And that's where, if you have your plan, you'll be able to capitalize on that. So the market doesn't give us a whole lot of opportunities like we may be coming up on. So having your plan and being prepared will really set your portfolio apart down the long term. So that is the mindset piece. And one other tip I have in here is obviously taking care of your family, to get rid of the other stressors. So if you can get good sleep, make sure your relationships are in check, your health is in check, you're going to be able to be in a better position to make better decisions. So typically our mindset can get off if we have all these other problems as well. So focus on yourself, your wealth, your family, all those things. That'll help you in making clearer decisions here as well. So that's all I got for you guys. Your call to action: share what you guys are doing in the comments. Hit the like button, subscribe. You can hit the bell to get subscribed and get notifications for when I post more videos. And just know that if you got a plan, you'll be all right. You got it. And that's all I got for now. So have a great rest of your day, everybody. Hopefully we get a green day one of these days. Peace out.